Welcome, dear traders. Wall Street will soon reopen after the Labor Day holiday. Yesterday, trading floors were closed, and US stocks futures began a shorter week with a slight increase after a 3-week losing streak. Asian stock markets are trading mixed. Watch our video review and find out more details. Let's start. This week, Fed policymakers, including Jerome Powell, are going to deliver speeches. Apart from that, major central banks are going to announce their key rate decisions. These events are sure to impact the equity market. Investors are still expecting an aggressive rate hike by the Fed, despite signs of a slowdown in the labor market. The regulator's main priority is to cap inflation, even if it may lead to the slower economic growth. The FOMC meeting is scheduled for September 21. Prior to the meeting, there will be more crucial economic reports. For example, the Consumer Price Index. So, despite hawkish remarks of Fed officials, traders do not rule out the likelihood of a 50 basis point rate hike. The US dollar is likely to maintain its bull run as the Fed sticks to a hawkish stance. Given that the majority of investors are pricing in a 75% rate increase in September, the US currency has been climbing rapidly. Besides, its rivals are on the bumpy right now. The US dollar has already reached new highs against the euro and the pound sterling and the yen. For instance, the yuan lost 8% versus the greenback on a yearly basis. And now the US dollar is the undisputed king on a forex. Yesterday it jumped above the pivot level of 110 points. However, today it retreated to 109.70, consolidating in the sideways channel of 109.38 and 109.71. Analysts advise considering a downward correction as a buying opportunity. At the same time, the overall upward momentum will persist as long as the US currency remains above the 200-day SMA at 101.06. The nearest resistance levels are located at the weekly highs of 111.90 and 113.35. As the Fed is poised to raise interest rates in the long term, the yen has no chance of climbing higher. The rate gap between the Fed and the Bank of Japan is widening as the latter sticks to an ultra-loose stance. As a result, the yen is gradually declining, and verbal interventions of a Bank of Japan policymakers who are watching the currency moves with a high sense of urgency seem to have no effect on the trajectory of the yen. For example, traders paid zero attention to the comments of a finance minister, Shinichi Suzuki. He said that sharp moves are undesirable. Meanwhile, Japanese households cannot overlook the demerits of the weak yen. In July, real wages decreased to 1.8% from 2% on an annual basis. Given the rise in consumer and import prices, the rapidly falling national currency is becoming a real problem for households and some businesses. The US dollar is exerting pressure on the yen too. The dollar-yen pair tested a 24-year low of 140.76. As seen on the chart, the yen halted its drastic decline amid the consolidation of the greenback, and it was trading in the price corridor of 140.22 and 141.86. In the Asian session, it tumbled to 141.79. However, the upward momentum is still strong. The AUD USD has a similar dynamic. The RC is unable to rise even after the Reserve Bank of Australia's rate decision. Today, the regulator raised the cash rate for the 5th time in a row. So the Reserve Bank of Australia also sticks to a hawkish stance like the Fed, the Bank of England and the central banks of Canada and New Zealand. The regulator took the cash rate to 2.35%, the highest level since 2015. It aims to push inflation to the range of 2 and 3%. Now, inflation in the country is at a 30-year high. And the Reserve Bank of Australia raised the benchmark rate by 25% in May. After that, it hiked the rate by 50 basis points 4 times in a row. Analysts noted that price fluctuations caused by rate hikes by central banks, excluding the Fed, have become short-lived. The AUD USD pair dropped to 0.6763 today. And another bearish factor for the Aussie is the fall in oil prices. Worries over China's economic outlook is also weighing on the pair. Apart from that, the European Union energy crisis also keeps bulls at bay. Therefore, a downward movement was quite predictable. Today, the pair is hovering in the downward channel of 0.6763 and 0.6835. And that's all for now. Subscribe to our channel and keep close tabs on the market developments. See you soon.